Welcome to Market Visionary. Today, we're diving into the November dogs of the Dow, stocks with high dividend yields that are considered underdogs due to price drops. These drops have boosted their yields, making them ideal for income-focused investors. I'll cover 3 top picks to buy right now and 7 more that are worth watching. The dogs of the Dow strategy is simple. Pick the highest yielding stocks in the Dow Jones Industrial Average at the start of the year. The goal is income and potential price growth. High yield often reflects undervaluation, meaning these stocks could have room for appreciation while providing steady dividends. Let's dive in. First, let's discuss the top 3 dogs to buy. 1. Verizon Communications, ticker symbol VZ. Verizon is a well-known name in telecommunications, with a solid dividend yield of over 6%. This high yield, combined with its established position in the U.S. telecom market, makes it a compelling choice for dividend-focused investors. Telecom companies like Verizon offer essential services that people rely on daily, regardless of economic conditions, making them resilient. Verizon has faced challenges like increased competition and high infrastructure costs, but its consistent cash flow and dedication to shareholder returns have kept it strong. For income-focused investors, Verizon's yield is one of the highest among Dow stocks, making it a top pick for November. Are you invested in the telecommunications sector? Do you see it as a good long-term hold? 2. Dow Inc. Ticker symbol Dow. Dow Inc., a leader in materials, has a dividend yield of around 5%. Dow produces essential chemicals used in construction, packaging, and electronics, making it an integral part of various industries. This high dividend yield and Dow's focus on efficiency make it an appealing option for dividend investors. The materials sector is cyclical, meaning it experiences ups and downs with the economy, but Dow's presence across multiple markets gives it stability. This dividend yield stands out in the industrial space, making Dow a strong option for those who want income while gaining exposure to industrials. Do you see potential in the materials sector? Is Dow Inc. on your radar? And 3. Intel Corporation, ticker symbol INTC. Intel is a big name in tech, especially in processors and semiconductor technology. With a dividend yield close to 4%, Intel is unique among tech stocks, which usually prioritize growth over dividends. Intel's high yield is attractive, and the company is heavily investing in new tech to compete with rivals, all while keeping its dividends steady. The tech industry is often challenging for income investors, as companies usually reinvest in growth rather than paying dividends. Intel, however, is committed to its dividend, making it a rare choice for those wanting both income and tech exposure. What's your take on Intel's direction in the semiconductor industry? Do you think it's worth the investment? Now, let's discuss 7 more Dow dogs to watch. 1. Cisco Systems. Ticker symbol CSCO. Cisco is strong in tech, specializing in networking and cybersecurity. With a yield of about 3.5%, Cisco offers steady income and has adapted well to industry changes. Cisco's focus on recurring revenue from software subscriptions adds stability to its cash flow. While the yield isn't high enough for a buy yet, Cisco is worth watching for potential price dips that could make its dividend even more attractive. If you're interested in tech dividends, do you think Cisco's shift to subscription revenue will pay off? 2. Coca-Cola Co., ticker symbol KO. Coca-Cola, with a yield of around 3%, is a steady choice for income-focused investors. Coca-Cola is a leader in beverages and relatively immune to economic cycles, making it reliable. However, it's currently a bit overvalued for its yield. Watching for a price dip could make it more attractive. The company has also diversified beyond soda, expanding into healthier products. This evolution and its global reach make it a solid long-term play for dividend income. Are consumer staples like Coca-Cola part of your portfolio? 3. Chevron, ticker symbol CVX. Chevron is one of the largest oil companies and continues to perform steadily with a dividend yield over 4%. While the energy sector can be volatile, Chevron's strong balance sheet and cash flow management have allowed it to maintain a stable dividend. With recent market volatility, energy stocks like Chevron could see price swings, possibly boosting the yield. If you're interested in income from the energy sector, Chevron is worth watching. What's your view on energy stocks in today's market? Do you think they're worth the investment? 4. Merck & Co., ticker symbol MRK Merck, a leader in healthcare, offers a yield close to 3%. Known for its innovations, particularly in cancer treatments, Merck benefits from a strong product lineup that could act as a buffer in uncertain times. Its stable yield and the steady demand for healthcare make Merck an attractive candidate for long-term income portfolios. However, Merck's stock price is currently a bit high, which could impact yield. Healthcare stocks are always a hot topic. Let us know if Merck or other healthcare stocks are part of your portfolio. 5. Johnson & Johnson, ticker symbol JNJ. Johnson & Johnson, another healthcare leader, has a dividend yield of around 3%. J&J's portfolio includes pharmaceuticals, medical devices, and consumer health products, offering stability even if one segment faces challenges. While J&J's price isn't ideal for maximizing yield, it's a dependable choice for those seeking stability and income. Keep an eye on J&J for potential dips. 6. International Business Machines, ticker symbol IBM. IBM is transitioning to focus more on cloud computing and artificial intelligence. With a dividend yield above 4%, IBM is both an income and growth stock. The shift has had its challenges, but IBM remains committed to dividends. Do you believe IBM's transformation will succeed? Are you optimistic about its focus on cloud and AI? 7. Procter & Gamble, ticker symbol PG. Finally, we have Procter & Gamble with a dividend yield just above 2.5%. Known for brands like Tide and Pampers, P&G's consumer products are essentials, making it resilient. While the yield isn't as high as others, it's a safe bet for conservative investors prioritizing stability. Final thoughts. These dogs of the Dow provide high-yield options across various sectors, including telecom, materials, tech, consumer staples, energy, and healthcare. Our top 3 picks, Verizon, Dow Inc., and Intel, are especially attractive due to their high yields and strong sector positions. The other 7 stocks are worth watching closely for potential price dips that could make their yields even more appealing. Which of these dogs of the Dow are you interested in, or do you already own any of them? If you found this video helpful, don't forget to hit the like button and subscribe to Market Visionary for more high-yield stock insights. Thanks for tuning in, and as always, happy investing.